Good afternoon, everyone, and welcome to Altcoin Mentors YouTube channel. My name is Peter, and today I'm going to be talking about Beginner's Essential Series, Scaling In and Out. Our main goal here at Altcoin Mentors is to help as many people as possible achieve their goal of financial freedom. We believe trading cryptocurrencies is an opportunity of a lifetime. By the end of this video, you should have a better understanding of how to scale in and out, risk management, and profit management. If you like our videos, please follow us on Twitter and on Telegram. We also have a model portfolio so you can view our positions and progress. The link is down below. If you'd like to be notified of our latest videos, please hit the bell button. All right, so let's start. Beginner's Essentials, how to scale in and out. So when people find out I'm a trader, especially for cryptos, they ask me, like, when do you take profits? How do you enter? Which signal to use? They have all these questions. The hardest part for a lot of people is how to enter, how to exit. Right? So entering a trade is, in my opinion, the science, and exiting is the art. And so I'm going to give you a better understanding of what I do in my years. So if you don't know that much about me, I am a professional day trader. I've been trading for over 25 years. I used to work on Wall Street. I have an analysis background, and I have a trading background. So not only can I read charts, but I can also, make trades. So it's a little bit different for a lot of other people because some people are really good at reading charts, and some people are really good at trading. So you have to be able to figure out both when you are a day trader. And that's why if you looked at my other Beginner's Essential series, I talk about the idea and the understanding that when you're trading for yourself, you have to make decisions by yourself and for yourself. So you can't listen to other people. This is a little bit different though, because this is not technical analysis, right? This is just about money management, risk management, the things that you need to do to become a consistent, profitable trader. Talk about money management. The idea is like, why scale in and why scale out? Most people don't. They go in 100% and they get out 100%. So scaling in and out is the best way to go. And we'll talk about the rules for scaling in and out, because sometimes people have a misunderstanding of how to scale in and how to scale out. So first of all, why scale in and out? So there are three main reasons for that. Number one is risk management. Number two is profit management. And overexposure, underexposure, which are a little bit tied to risk management and profit management. So let's go over the first one, risk management. So technical analysis, right, is pretty good most of the time. But the problem with technical analysis is that they don't really teach you how to trade, right? Because when you look at a chart, you say, oh, I can enter here, I can exit here. But when you're actually trading live, it's totally different. So if you pair it with risk management, though, technical analysis becomes a little bit better. So no matter what you use, Elliott waves, moving averages, support resistance, whether you use candlesticks, Hakanashi, point and figure, anything that you can use, right? It always goes better with risk management. Because the key when you're trading is not just about making money; it's also about preservation of capital, and that's why scaling in and out, right, is an ideal way to preserve capital. The other idea is profit management, because you can't always know when to take profits, because technical analysis, is very weak on exit. That's why I talk about the science of entry, right? Entry is a science and exits are an art. And a lot of people say, though, but I have a stop loss, though. So once I hit my stop loss, it'll kick me out. But the understanding is that stop loss is the emergency brake. You should be able to get out before the stop loss. So if you enter a trade and you have a stop loss way down below, it's mostly a stop loss, which means you're going to be stopping a loser. But as it's going higher and higher and higher and you're making some money, right, do you turn your stop loss into a trailer, right? Where is your exit? Where do you have your plan? And that's what I'm going to talk about today. Right, the next one is overexposure and underexposure. Because there's an old adage, and people see it on Twitter, and you see it all the time, is that when you're right, you never have enough. And when you're wrong, you always have too much. And by scaling in and out, you can kind of blend this thing in your favor. So we'll talk about the basic rules that I use for scaling in and out. So I use a 40-20-20-20 rule. So that means that if I see a good entry for my position, I'm not talking about 40% of your whole portfolio, but when I have a portfolio, let's say I have $20,000, right? And I want to have exposure to Bitcoin, Litecoin, Ether, maybe a couple of other smaller ones. So what I do is, and I figure out how much of my portfolio do I want to put into this one coin, into this one trade. So let's say I want to put in 4,000, right? At the max. So then what I'll do is I'll enter at 40% of that. So that means I'll scale in at 1,600, right, on a coin, right, in my first entry. And then as it goes higher and higher and higher, then I'll add a little bit more, add a little bit more, and add a little bit more. And then when I see something happening, I can exit at 40% again, and then subtract 20%, 20%, and 20%. So what this does, you'll see when you do the math, is that you'll be able to protect your profits. So you may not hit all these big runners, right? But that's the difference between hodling, long-term investing, and maybe like position trading. Because as a position trader, as a swing trader, what you need to do is you need to take profits because you're going to be a little bit more active in your trades. You're not just going to buy it and hold it, right? So I'm going to talk about what happened in the last couple months. So for Bitcoin, for example, on April 17th, I entered a position at about 8,100. I went in at about 40%. April 23rd, a week later, I entered more at 20% around 9,000. And a week later, I entered another 20% at 9,100. And then starting on May 10, I started exiting my positions. So I exit my positions at 9,100. Right? But see how my entry at 9,100 was only 20%. But my exit at 9,100 now, right, a week and a half later, is at 40%. So here what I'm doing is I want to preserve profits. So when I enter, I don't want to go in all the way into the max, right? I want to slowly enter. I want to make sure that this isn't going because remember around April 17th, we had just taken a big upswing, right? So you don't know. No one really knows if it's going to keep on going higher. And then on May 10, even before that, it started going a little bit higher, went almost 10,000. So I want to give it some room. And then at 9,100, I'm trying to exit. May 14, a little bit exit more. And then May 21st, exit the rest. So here, I never got to my full allotment. I went 40, 20, 20, not 40, 20, 20, 20, right? Because I'm waiting for entries, and it never happened. So I'll show you the chart. So this is the Bitcoin chart for April and for May. So if you see here, this was my first entry because, I'm not going to take this entry over here because it's just way too early. So I got in a little bit late. In my opinion, not too late because it's just right here. It bounced off of major support at 7,700. I took the long side. I entered a position. I entered long, and I entered long. And then after it bounced off my intermediate resistance line at around that 99.30, I started shorting, right, at a good place, 9,100, short, and then short again. So I want to be able to have my exits kind of pre-planned so that I can take advantage of my profits right over here. So these are the ideal entries. So here, I'm not going to get out over here because the reason why is that you want to give yourself some room. So the ideal entries is here and here. I only show this because some people will say, well, I would have gotten out here. So I'm going to hit all aspects because if you had gotten out here and maybe you're a genius, maybe you would have gotten out here. Right, but I got in here, so I'm going to get in here. So I'm going to wait for the second one. But I'm going to exit a little bit faster here and exit a little bit here. This is C, right? And I'll talk about where that is. Because the results in the scaling plan is that I end up taking a 9% total profit. Because I get in a little bit late, I exit a little bit earlier, mid-range, and then I exit earlier and earlier. If you're all in from top to bottom, right? Not if you've gotten at the way bottom. So let's go backwards a little bit here. All right, we'll go back. All right, go back here. So if you had gotten in all the way over here to here, yes, you're gonna make a lot of money. But if you had gotten out, if you had gotten in here and gotten out right at the top, you're gonna make 15%. If you do the all-in plan, go in all at once and then get out, kind of a little bit where I got out on my second one, you're gonna make 9%. So the same thing, right? Scaling in and all-in B, right, ends up being the same. But what if you went all in and then you got out a little bit late, like all in C? Then what would have ended up happening is that you would have had a 5% loser. So by scaling in and out, you might not make as big of a profit as going all in and getting in at the perfect time and getting out at the perfect time. But this is a blended approach, right? This is more of a professional approach. This is more of a business approach. So by treating this like a business and having a plan, right, you won't get amazing results, but you'll never have really, really terrible results, right? You'll have decent results, good results that over time will make you money. And 9% over a month and a half is not bad. What happens with the idea is that, because of 2016 and 2017, people made 10x, 20x, 30x, 100x. Now they kind of expect that over and over and over again. But as you can see now that Bitcoin is channeling, going down, being very rangy, it's harder and harder to make that. Right now at this point, in my opinion, it's almost impossible, right, to make 10x, 15x, 30x, unless you're buying a coin that's worth like, a tenth of a penny and it goes up to 1 penny, right? You make 10x. But I'm not trading those things because those things have no volume, right? And I don't have enough time to do all the research, fundamental analysis, to do all that kind of stuff. I want to look at charts. So by having scaling in and scaling out, I have a better opportunity to make a decent amount of money, right? Trading for a living. So we thank you very much for watching. If you like our videos, please share it with your friends and other crypto traders. You can also follow us on Twitter and on Telegram. If you have any questions, please ask away in the comment section below. We do a very good job of answering all our comments and questions right away. Thank you again for watching, and see you in our next video.